Hi everyone, welcome to today's cryptocurrency investing updates. We have a couple pretty interesting topics for discussion today, one of those being Paul Tudor Jones. But first, what's going on with the price of Bitcoin? Why are we starting to see prices push down from the high over here? Well, it's likely due to a buy the news, sell the event type scenario. If we take a look at July of 2016, the previous halving, we are currently mirroring what we saw back here. So there is a run up into the halving and then a quick pullback after the halving and then a resumption of the bull market. What's going on here is we had a ton of people buying Bitcoin up left and right in anticipation of the halving and selling right before the event because they're realizing nothing will inherently change in the broader market immediately. I think it's possible we don't see the full effects on supply restriction for the weeks or months to come, but it's important to realize that the macro environment and fundamentals for Bitcoin have not changed overnight. In the long run, I believe prices will be exponentially higher from here. We are still seeing a huge expansion in the supply of dollars due to the stimulus being pumped in by the Federal Reserve, and when we see an increase in the supply of dollars, we typically see a rise in inflation, which should act as a tailwind for scarce assets, which is why big institutional investors like Paul Tudor Jones are beginning to invest in assets with fixed supplies like Bitcoin. Reading into this article from Bloomberg, macro investor Paul Tudor Jones is buying Bitcoin as a hedge against the inflation he sees coming from central bank money printing, telling clients it reminds him of the role gold played in the 1970s. And for those of you that don't know, Paul Tudor Jones got his investing career started in the gold markets of the 1970s. He was buying gold when everybody else was selling it. And he continued to make a career out of other contrarian investments like shorting the stock market right before the Black Monday sell-off in 1987 and shorting the Japanese equity markets in 1990. So the guy is a seasoned market expert that now sees another opportunity in Bitcoin. Moving further into the article here, Jones, who said his Tudor PVI fund may hold as much as a low single-digit percentage of its assets in Bitcoin futures. And for a hedge fund, a low single-digit percentage is a massive amount of money. Taking a look at Tudor BVI's assets under management, the gross value of that is at about $21.5 billion. And for argument's sake, let's say he puts in 3% of that into Bitcoin, that's about $650 million. So it's no small chunk of change. He was motivated to take a hard look at Bitcoin after considering the implications of massive physical spending and bond buying by central banks to combat the coronavirus pandemic. By his calculation, $3.9 trillion of money, the equivalent of 6.6% of global economic output, has been printed since February. It has happened globally with such speed that even a market veteran like myself was left speechless. We are witnessing the great monetary inflation, an unprecedented expansion of every form of money unlike anything the developed world has ever seen. The question for a macro investor like Jones was how to hedge. He said he considered various bets on gold, treasuries, certain types of stocks, currencies, and commodities before recognizing a growing role for Bitcoin. I've explained this in a couple other videos, so I won't go into too much detail today, but it's likely that Bitcoin will behave very similarly to gold in an inflationary environment. Both have fixed supplies and are designed to hold or transfer value. I think Bitcoin's role could turn into that of a more efficient gold as it's easier to store and faster to transport. And I believe Paul Tudor Jones also has arrived at a similar understanding. For anyone that wants to read the rest of this article, I'll put a link in the description, but it ends with a quote from Paul Tudor Jones saying, "Bitcoin reminds me of gold when I first got into the business in 1976. Now moving on to an article from Forbes talking about the halving and the increasing user bases across multiple cryptocurrency exchanges. In the lead up to the halving, we're seeing a lot of people speculating on what will happen, whether the price will go up or down, or if it will be a non-event," said Danny Scott, chief executive of the cryptocurrency exchange Coin Corner, comparing the Bitcoin halving to the build-up to New Year's Eve celebrations and warning people not to focus on short-term price movements. Personally, I couldn't agree with this statement anymore. When you get caught up in the minutia of day-to-day price action, especially of a long-term investment, you tend to lose sight of the bigger picture, and in the case of Bitcoin, that is the larger macroeconomic background that supports a push higher in the months and years to come. Now for swing trading and shorter term investing, it's perfectly fine to look at lower time frames, but when you are holding on to an asset you don't plan on selling for 6 to 12 months, it's usually a bad idea to focus on anything other than the fundamentals and the larger time frame price action. So continuing on, there's typically a big build-up to the night itself, but the event is technically over as soon as midnight strikes. Coin Corner, along with many other Bitcoin exchanges around the world, has recorded an increase in new users signing up over recent months. We've actually seen a 21% increase in signups during April, which adds to this year's strong growth and the build-up to the halving. Elsewhere, the London-based Bitcoin exchange Lumo claims it will hit 4 million users in the coming day, most of whom, 75%, expect the Bitcoin price to be higher or much higher by the end of 2020, according to a recent user survey. Less than 5% of Luno users said they plan to sell their Bitcoin over the next 6 months, with more than 90% expecting to buy more. So you have an increasing user base enter the crypto sphere, buy up Bitcoin, and hold on to it expecting higher prices. Now I feel like this could very well turn into a sort of a self-fulfilling prophecy. We saw something very similar happen in the months leading up to the 2017 bull run. I remember seeing a ton of people at work dump paycheck after paycheck into Bitcoin as prices doubled, tripled, quadrupled into the bull run. And personally, I'm expecting to see something very similar happen once we start to breach all-time highs. So once we start to breach the $20,000 level. And that's going to be it for today's update, everyone. Thank you so much for watching, and if you've made it this far, I encourage you to like and subscribe because I plan on coming out with a lot more crypto and other investing related videos in the future. And that's going to be it. Have a nice day, everyone.